Hi, my name is Jess. I am a wannabe oil trader from the UK. This is actually my sixth upload onto YouTube. I did mention in my last video that I was thinking about stopping the videos or pausing them for a while, and I've put a lot of thought into it over the last month, and I have decided to pause the videos for the time being. There's lots of different reasons that have led me to this decision. It wasn't just one main factor. The first reason is, am I bringing any value? Am I helping others here? Possibly. I will definitely be leaving the videos on YouTube for other traders to take a look at to see if they want to use fundamentals for the market that they trade to help them gauge direction. But ultimately, I just feel that actually most traders don't give a shiny shit about fundamentals, particularly if they are very technically trained. Another reason is I was using this as a way to show my progress to my friends, but really everybody that I want to speak to about trading, I already speak to on Messenger to discuss their ideas, my ideas, and my trades. So I don't really need to be creating this content just for them. I do get quite a few views, which is unexpected but appreciated, but I'm not providing real-time information. I'm not going live. I'm not bringing signals. Everything that I talk about in my videos is in the past. And really, is that helpful for other people? Probably not. So that is one reason, the value that I'm bringing, also the value that I'm getting. And I apply that method to any situation in life. Am I giving value? Am I getting value? Yes, I am getting value. I enjoy doing the videos. They've definitely got easier as time's gone on. Whether or not they've improved, I don't know, possibly in some way, but it really helps me to cement my knowledge that I've learned that month. And it does provide a good platform and outlet for me to record my progress and for then so I can look back on it like an online journal. But ultimately, creating the videos is actually a bit of a distraction for me. It takes time to create and prep and record them. And I only have a limited amount of time per week and month for trading and trading related activities. And I just felt that actually the time could be probably better spent in something which is helping me to progress, because the videos probably don't really help me to progress as such. I really want to learn Fibonacci. And I'm quite aware it isn't something that you just pick up overnight. You do need to spend some time on it. So I've actually got a seminar online tomorrow evening, which will hopefully be like a good starting block for me to really get down to the real hardcore elements of Fibonacci and how to use it properly. Also, I want to get back into having a go at the futures market. I've kind of like just dipped my toe in before, and just really attempted it a couple of times on prop firms, but it is something that I really want to have another go at and just kind of transfer my oil knowledge to the futures market. So, with all that being said, there's sort of professional trading reasons, but the main and biggest reason in my personal life where I've decided to cut off the videos for a bit is that I'm actually going to be moving soon. And that move is starting to gain a little bit of traction now after waiting for years. And it's my partner that I really want to just be fully focused on and fully there for whenever he needs me. So I can really help him and his kids and animals all get through the move. And obviously for myself, when it isn't around the corner, we're hopefully moving up to the other end of the country. So it is going to take quite a lot of planning and work. And I just really wanted to be fully focused on that. The good news about all of this is that I am not committed to anybody or anything but while I'm making these videos. I haven't even given myself a time frame of how long I'm going to commit for. For an example, with my fundamental news and my book that I've been recording in for the last 9 months, I promised myself a year's worth of daily fundamental knowledge, of recording it and making it make sense. But this, I never ever said, oh, I'm going to do it for a year or 6 months. So that's made this decision so much easier. That I don't answer to anybody while creating these videos. It's completely my choice, and there's just no commitment there. So again, it's made my choice easier. And hopefully, you know, in 6 months, a year time, whenever I do come back with the video content, I'll have another X amount of months experience under my belt, hopefully some new techniques to show that I've learned, which is helping me progress in my trading. And also be in a new location, which would be way more suitable for me all round. So let's hope for that. And I look forward to bringing that when it happens. But for now, I'm just going to go back to the normal format for the videos, which is the fundamental chart and how the market moved over the previous month, followed by my trades and how I navigated my way through those moves. So let's get on with that. You're welcome to screenshot, zoom in. All this information in yellow is the headlines that happened each week in the market. For the supply and demand side, whether or not it was bullish or bearish a price. Unfortunately, I don't have space to list everything. I've just listed the real main focal points for each week. And then up at the top here, I've listed the main bearish factors for the month, followed by the main bullish factors. So let's start from the TOP and have a look at bearish news factors that pushed price down or capped gains over the course of the month, that stopped price coming up any more than they did. The first one is the Trump tariffs. These have been looming to start kind of now at the beginning of March, and they have started on time. This is tariffs against Mexico, Canada, and China, imposed by the US. And so far, they've created a feeling of a broader trade war in the oil community. And a broader trade war between these countries on their imports is signaling towards a global economic slowdown. So if that does happen, if these trade tariffs and trade wars continue, that could potentially create a global slowdown economically, which is negative for oil price, because when there has been slowdowns in the past, the demand for oil has decreased, and that's why it's a bearish news factor. Moving on to the US inventory builds. The US inventory is a weekly stock take of all of the commercially held oil which is stored and held in the US. For the first 3 weeks of the month, the inventory had builds of quite a few million barrels. So that signals bullish behavior for two reasons. First of all, there is a surplus, or there is enough oil in stock or supply in case it is required, which is bearish a price. And secondly, it is signaling that the demand in the US is weakening. So that's the reason why that is bearish for price. Interestingly, though, in the last week of the month, in the 4th week of February, there was actually a drop in inventory, which should traditionally be bullish to price because there's less oil available. But because there was a build in the products, so gas, jet fuel, diesel, because that inventory was higher, there was a build in the products, it actually also was a bearish factor for price in week 4 too. Okay, moving on to Putin and Trump. These talks have been going for pretty much the whole of February to try and bring about a peace deal in the region. There's 3 reasons why this is bearish for price. Let's go through them. So the first one is, at the moment, currently Russia have sanctions on them by the US for the amount of oil that they can pull out of the ground and export out of the country. If the war ends and peace ensues, there is a high possibility that those sanctions will be lifted. So that will then put more oil back onto the market, and especially from Russia as well, one of the global exporters, a top global exporters of oil. So just the threat that they may have their sanctions lifted is a bearish factor for price. Number two, the risk premium. If the war ends, the risk premium that is currently being priced into oil will be removed, bearish factor. And also the risk to supply. So while the war's going on, there is a risk to supply, oil fields, pipelines being attacked. Obviously, if war is over in the region, that mitigates that risk. So that, again, that's a bearish factor. So it would be interesting to see what goes on, particularly with the tariffs and in Russia, Ukraine going forward. I will be having my eyes on the news for sure. Okay, let's go down to the bullish factors and let's see what pushed the price up over the course of the month or attempted to lift price up out of this range, or supported price at these levels. First and foremost, the sanctions on Iran. From what I can research, traditionally, Iran has been a heavily sanctioned country for their oil, but because of that, they've found ways of loopholes, if you like, of dodging the sanctions. So there has been talk several times of the sanctions tightening on Iran, but any time that happens, it just seemed to be a bit of a knee-jerk reaction. And as I said, the country will always find a way to export their oil. So, and actually, interestingly, in week 4, there was a report which says the Iranian exports are elevated for now. So, any sanctions that have been put upon Iran by the US to date haven't really been holding too tough. They're not listening. They're finding ways to get their exports out. US is looking for zero exports from Iran. So again, it'd be really interesting to see how that plays out going forward. Let's have a look at week 3. There was a Russian pipeline attack which caused this bullish momentum here, as a couple of other bullish news factors. Kind of talking goes back to what I was just talking about with Putin-Trump thing. It was a risk to supply, the pipeline being attacked by a Ukrainian drone. But again, it was a knee-jerk reaction and a short-term supply risk. And that's kind of leading me on to the sort of third and final bullish overrider factor for the month, is that these short-term supply risks were causing the spikes up. Now, last month, I predicted for February that the price would be overall bearish with some volatile spikes up. And that is kind of what happened. It did play out, although I thought the volatile spikes would be more short and sharp over hours rather than over days. But that is what happened. And these, when price lifts, this is due to short-term supply risk. So I've just mentioned the Russian pipeline attack. Price went up because of that. And then whenever the US tightens the sanctions on Iran, like at the start of week 2 here, and then other factors like weather factors, such as in North Dakota, a main oil pipeline, which is transporting oil across the US in North Dakota, that was frozen because of the cold weather. And again, that helped contribute to this bullish rally here. So, but price was always pushed back down again by these overriding and heavier downward pressures from these headlines here. So we did very much go into a bit of a range for the first 3 weeks of the month there. We actually started the month on 74.49, finished the month on 69.57, which was an overall decrease of $4.92 or 4.92%. Okay, let's have a look at my trades for the month. Wait for it to load. Taking its time. Okay. this is how I navigated my way through the market last month. I also explained on my last video how I was stagnating myself. November, December, January was stagnant months for me in with my trading. So I kind of promised myself that I was going to throw myself in a bit more wholeheartedly this month, and that is last month. That's exactly what I did. I just wanted to feel something again, I suppose, after having quite a flat 3 months in the market. I just wanted to feel losses. I wanted to feel the winds. So I just kind of threw myself in a bit more willy-nilly. So I'm going to talk through each week as it happened. So to start the month off, I took a buy from 72.50, which for me is an area of support and resistance. But price continued down and I got stopped out 30 points. That was a loss to start the month, not a great start. A little bit later on in the same week, my buy zone turned into my sell zone. I took the sell from 72.50. That played out. I took another entry at 71.70, which then played out. I took partial. So the trade that I took at 71.70, I then closed out at 70.68. Held on to the first trade all week, but it didn't really break this level of support here at 70.16. And then I closed the initial position in profit at about the same place as where I closed my partial, 70.60. That was week one. It went okay. Week two. Now, over the weekend, I do read the news. I am a geek, so I saw that there was some Chinese manufacturing and consumer confidence news over this weekend, which was bullish surprise. The data suggested bullish surprise. So I just took a fundamental buy at market open. Price lifted. That was at 70.70 that I took the buy. I closed the trade at $72. So that was a good start to that week. Price was carried on going up. I kind of guess I just read the news wrong. I thought there was more bullish momentum left in the Iran sanctions news. So this area again, 72.50, I went for a buy. And I should have gone for a sell clearly, and I got stopped out another 30 points. That's fine. This was on Wednesday. Now I work on a farm Wednesdays and Fridays. So it's not like I'm sitting at a nice little office desk taking little sneaky looks at my trading while the boss isn't looking. I'm doing a physical job. My hands are covered in muck most of the time, and I just physically can't look at my phone to take trades. But I did check this trade at lunchtime, or this move at lunchtime, and felt quite sick that I wasn't in it. Excuse me. So I didn't take any trades for the rest of that week. Week three was all about sort of grand ideas and none of it really playing out. My first actual idea was kind of around here at 71.40, but I woke up on the Tuesday morning and price was in my second sell zone of 71.70. So I took the sell there. It did play out for a few, that was at London Open. It did play out for a few hours. And then it just kind of reversed and went back to break even. Fine. There was a small drop on Wednesday when I was at work, and there it is again on a Friday. These moves happen on a Wednesday and Friday when I just can't really do any trading. Super annoying, but I guess anyone who works will feel the same frustrations of missing out on good moves because of boring old work. So that was that week. I was gutted I missed that drop again. Looked at Friday lunchtime and saw it was just melting. This week I waited for price to come up a little bit further. I took this trade based on moving average rejection and a trend line which actually isn't penciled in here. But that was a good one. This was my trade in the month for sure. So that was a sell at 71.13. It was a 2% drop that day. And I exited all my positions the next day at 68.70 when I just felt like it was all running out of a bit of puff. So yeah, that saved me, that trade. It was my trade in the month and I'm grateful for it. my next idea was the sell from 70, 70 being a really nice area of support here, and it had been for ages. So it's actually 70.14. So price came up to 70.34. So if I had taken this sell here, my stop loss of 30 points would have covered it, even though it wasn't quite there. My target was 70.14, price come to 70.34, then it dropped. But hey, it came up to 70.30 again here. So before absolutely melting in March, and I am in a sell currently. So let's see how that plays out. I think it's going to go down to 65 going forward. I guess if I was going to do any kind of prediction, then it would be price going down to 65. But hey, let's see what happens. So there we are. A better month in terms of just like throwing myself in. I had a couple of losses, a couple of wins, and a break even. So not too bad at all. So there we are. I just wanted to take this opportunity to say thank you to anyone who sat through my quite boring videos. I really appreciate it. I would love to come back in a few months as a profit maker rather than a flatliner. But hey, let's see what goes on. I truly wish any traders out there nothing but success in everything they do over the next few months. And hopefully see you from a countryside location in a few months' time. Over and out. Peace.